All right, fighting inflation. The Fed raised its key interest rate by 3/4 of a point last week, the highest rate hike since 1994, and that could also help cool the housing market a little, since the rate on a 30-year fixed mortgage is also up to about 6% right now. That has many home buyers looking at adjustable rate mortgages. 10 Tampa Bay's Jenny Dean is here now to explain what that is, along with the risks and the benefits, Jenny.
Yeah, Caitlin, adjustable rate mortgages, or ARMs, they have surged to a 14-year high. Right now, they make up about 11% of all home loans, compared to just 3% of them at the beginning of this year. Now, part of the reason for that demand, people still want to buy a home, but they don't want to pay the higher fixed rate. Basically, an ARM is a fully underwritten mortgage where you get a lower fixed rate for a term of 5, 7, or 10 years. The shorter the term, the lower the rate. But after that 5, 7, or 10 years, the rate goes up, and there's no guarantee how high.
But the risk with an ARM is that you go to the adjustment period. So let's say you take a 5-year ARM and then rates adjust. Now, if they adjust upwards, you are dealing with a higher payment.
So you really have to know your situation before choosing this mortgage option. For instance, if you know you're buying a starter home and you're likely going to sell it within that shorter term to move on to your next home, well, that would be a good reason to get an ARM. Or if you know you have money set aside to pay it off before that short term ends.
So good tips here, but again, there is some risk involved, especially for the average buyer.
Yes, I mean, we all want a lower payment, right?
Yeah, sounds good.
But you really have to talk to your mortgage lender. This is where they should really come in and take a hard look at your personal financial situation and see if you can handle that higher payment after the short-term loan, because again, home values aren't guaranteed as well. So if you were looking to flip a house pretty quickly,
right,
you need to make sure that the home's going to retain its value, and there's no guarantee on that. And, you know, it may not go up as much as you expect, or worse, it could even go down. Of course, that's what happened in the crash of the housing market back in 2008.
So many questions with the market right now. It's continued to climb.
Yes.
We'll see where the bubble bursts, if it ever does.
Yeah, and talk to your mortgage lender. That's really your key there. Look at your financial situation.
Right. Thanks, Jenny.